It's Finance Friday. Tax season has arrived, and we're talking business taxes with FirstOntario Senior Manager of Business Services, Colin here. Good morning. How are you?
I'm well, Rick. How are you doing?
A lot to get to with business. There's a lot of things going on.
There's a ton, and there's a reason that people keep professionals in their corner. It's a lot to keep on your head as a business owner. So we're going to talk about some of the high-level things that should give you a little bit more level of comfort.
This is a stressful time for many business owners, too, especially if they don't have a professional like you.
That's right. Yeah, accountants. I'm not an accountant, but I wore my accountant suit today, so I'm doing my best impression of one.
Nice.
But yeah, keeping people in your corner can keep you organized. Right. And so one of the main things that an advisor is going to do is ensure that you're meeting your deadlines. These are the most important things. And so when we talk about deadlines, firstly, it's understanding that there's different deadlines for businesses from a filing and payment standpoint. Okay. So as a corporation, your filing deadline is typically 6 months after your fiscal year end. But if you owe money, you could actually owe it well before your filing time. And so that gap can catch people off guard. Now, as a sole proprietor, it's similar to your personal returns. They're due by June 15th. But if you owe money, you owe it by April 30th. It's something that really can catch people off guard. And I think a lot of folks as business owners don't also realize if you haven't earned revenue as a business owner, you still have to file a return. So there's a reason you want to be keeping these deadlines in mind.
Write-offs, deductions, there's so many things to keep in mind. Can you simplify it? Where do we start?
Let's start with contributions. Okay. So we're talking CPP first. Sole proprietors, you're considered the employee and the employer. So that means you have to contribute 11.9% base rate of your maximum pensionable earnings. Max contribution in 2025 was $8,068.20. There could be a CPP2 rate on top of that as well you'd have to consider. Now, as a corporation, if you're paying yourself salary, you're basically paying the employer portion through your corporation. Right. And if you have dividends as a way of payment yourself, you don't actually have to pay CPP, but you're also not building that entitlement down the road. So that's the CPP bit. EI, if you have employees, you have to pay 1.64 times the employee rate on the maximum insurable earnings. That's a maximum of $65,725. As an owner, you don't actually have to pay into EI. However, you can opt in if you want to take advantage of things like parental benefits, sickness benefits, and the like. Right.
When it comes to practical ways that businesses can make tax season easier, is there a way to do it?
Without a doubt, is getting yourself ahead of schedule by having digital invoicing, digital accounting software. You don't want to be scrambling at year end to make your bookkeeper accountant happy, or if you're doing it yourself, even more so. There's a ton of tools out there that you can use to, in real time, ensure that you're separating your expenses. So when your accountant's saying, is this a deduction? You're saying, absolutely, here's the invoice to prove it. And also just holding funds aside. So at the bank or credit union, we'll typically open up a secondary free account for our business owners. Right. They can shuffle off 20%, 30% of their earnings to keep it there in a tax holding so that it's there come payment deadline.
You mentioned technology. Has AI entered the fray when it comes to tax season? We got a minute.
Yeah, absolutely. I think a lot of softwares are really smart in determining, okay, where does this bucket in? So if you have, travel costs, meal costs, your expenses are going to flow through, and a lot of those softwares are now saying this goes into this bucket, that goes into this bucket, and are basically doing a lot of the heavy lifting for you. That being said, there's no replacement for a human. You want to have advisors in your corner. You want to have the right people to ensure that you're getting, the most out of your return, and ensuring obviously you're meeting CRA guidelines and obligations, because they change annually, and there's no substitute for a CPA really to ensure that you're keeping on top of things. Yeah.
In our final few seconds, final thoughts or advice for business owners out there?
I think it's important to as a business owner, understand really the difference between deductions, contributions, write-offs. I think about that Seinfeld episode where Kramer tells Jerry it's a write-off. It might not be. Yeah. You might want to look into it because particularly things like write-offs, it has to support business earnings. If it doesn't, you might have a hard time claiming some of those expenses.
Yeah, consult with a professional like Colin. It might not be. If you have a financial question or a topic you want covered, email your questions to financefriday@firstontario.com. If your question or topic is covered on air, you'll receive a gift card from FirstOntario. Thanks for joining us this morning.
Thank you, Rick.